Thank you so much for joining in with us this afternoon on ET Now. It's always a pleasure having you on the show. Sunil, I was just reading the latest report that you had as well, and what in terms of data points that are coming in is that India is seeing a lot more in terms of the FII selling coming in versus China, which is managing to actually get in those flows. What's the thought in terms of China versus India? Do you think that China will continue to see the steady inflow, while versus what we're seeing in India is a sell there?
Yeah, I mean, that's a great question. I mean, first of all, pleasure to be back. I would say, look, I think you're right. In the last month or so, we have seen obviously Chinese equity markets having a very significant rally. The market there is up like 15% in the past 1 month. India is marginally kind of down for in the last 1 month. So flows are showing that. I think China has seen already sort of 3 billion plus in the last month. I think India is down 2 to 3 billion already, right? So that's happening. Sort of we are seeing that in terms of the desk activity as well. And a lot of the clients we are talking to are incrementally, I think, trimming some exposure in India and putting in other parts of the region, China notably, but also Japan, Korea. A bit of that is happening. I would say I think there are a couple of things to keep in mind here. One is that, look, I think tactically we could see this play out for a little bit because it does seem that China equity markets are having a momentum behind that. But if you look at longer periods of history and look at China's flows correlation to the rest of the markets, that's generally positive most of the time. I mean, what that means is that flows in general within the region is not a zero sum game. You could still see flows, positive inflows, I mean, inflows across the markets as long as fundamentals support it, right? So we're still hopeful given the strong fundamentals in India, you could see FII money coming back. So that's, I think, the first point to keep in mind. The other thing I would mention is that in addition to the Asian funds and emerging market funds, which are obviously doing this rotation within the region, there is also a large pool of global money, which is still underweight India. If you look at the FII allocations in India, they're still at 11-year low. 2 weeks back, I was actually seeing investors in Europe and London and then in New York as well. And I would say one thing that came out quite clear from those conversations was that people are still significantly underexposed to India. They're very keen to increase exposure in some of these thematic areas in India. So I would say if you put all of that together, we still think barring some of this rotation that might happen because of China versus India, because of the stronger fundamentals in India, you could see FII money coming back. Perhaps after the election, you see that trend playing out. I think the last thing I would say on the flows bit is that despite, I mean, we being focused about the FII flow rotation here, we also need to remember that the domestic flows continue to be very supportive here, right? The SIP number, which just came out last week, continues to hit record highs. So that is another reason why the market is still range bound here, despite Chinese equity markets actually up close to 25% from the lows in February. That's a very strong move, but India has still been able to hold onto its gains. I mean, consolidating, but still not fallen significantly here.
All right, Sunil, very good afternoon. This is Shrishti also joining in. So it did mark that the Chinese economy is getting some momentum back and interest from the investors. But Sunil, any sector or any tactical play that you would like to highlight, since a lot of these sectors are related from the Indian economy as well, because the metals are showing good rebound, especially in the Indian markets. The chemicals plays are doing well. Some of the CDMO players are showing some strength. So with the Chinese economy opening, do you believe that there are some sectors or some areas that one should look out and have a look at?
Yeah, look, I think if you look at the broader listed market, and I'm talking about MSCI India in here, the actual revenue exposure to China from India is actually very small, close to only 1%, right? So if you look at Chinese economy improving and which other markets in the region are more sensitive to it, I think India is one of the least sensitive in that sense. Obviously, as you mentioned, there are pockets of the market. Chemicals is one. I mean, obviously, metals is the obvious one there. But I would also say that if you look at the recovery in Chinese market, what's driving that, it's important to see. There was a bit of surprise in the 1Q GDP numbers, and so there were some upgrades in the market. So there is a little bit of growth improvement, but more than that, I think it's a sentiment improving. A lot of the long onlys coming back to the market, but also supportive policies which have more to do with sort of the shareholder reforms in China, as well as some sort of evidence of stabilization in the property market. So we aren't seeing. So if you look at the earnings in China, which is I think another indicator of how strong the growth momentum there is, so far we are also still seeing earnings downgrades in the market. Only there are select pockets of the market, notably internet and consumer bits, which are seeing some modest upgrades. So I wouldn't say the economic momentum is very strong, and therefore that should translate into a lot of the demand and improvement for some of the Indian sectors. But for as of now, it's still sentiment that's driving it, and flows that are driving it, on the back of more supportive policy coming in, expected to come in forthcoming months. So metals would be one place, chemicals would be there, but I think a lot of the other listed space in India doesn't have a lot of end demand coming in from China yet.
Right. So, Neil, I just want to go back on the point that you were making in the first answer when we spoke. You were saying that in terms of how we are seeing that recovery that is there in China, right? But one more point that actually comes in is that in terms of overall the spaces that you're highlighting right now, SIP flows, like you said, that they are quite strong. Domestic flows are there, but what is the concern that is coming for an FII investor? You said that you are in talks with them, you've spoken to them. What is the concern that is there for the Indian market for an FII investor right now? What is it that they're worried? Other than elections, is there anything that is a worry?
Yeah, I wouldn't say worry. I would say, look, I think high valuations is still a concern that many of them speak about. But even there, I would say the incremental, if you talk to the same people 3 to 6 months back versus when you talk to them now, I think there is a general recognition that the Indian markets are kind of held up pretty decently, and so it's a market that where valuations may still remain elevated, and that's why I think people are kind of keen to raise exposure. I mean, if because of these, whether it's election-related risk, whether it's some of the global risk, if you see any pullback into the market, we think that will be therefore bought by these FII investors. I think what's also true is that a lot of the people already have sort of banks in their portfolios. So where we spend quite a bit of our interactions with investors is what are the other themes in the market where they can raise exposure. So I think that's where I think people are kind of spending more time, whether it's kind of the consumption, sort of the high-end consumption recovery theme, whether it's the Make in India theme, whether it's the real estate recovery theme to play. So I think that's where people are kind of trying to do more work and see if you get slightly better entry points there. So I would say that's where the focus has been from investors.
All right, Sunil, just a viewpoint there from you on the Indian market specifically, since we have seen a lot of these FIIs selling in for the month over month. We have seen number increasing also in the month of May as well. Day by day, we see FIIs selling happening, and you're of the view that post-election maybe there's a possibility that FIIs could come back. But in the near term, Sunil, what are the concerns that is keeping FIIs away from the Indian markets? And do you believe that the DIIs could be supportive enough to get away with the volatility that we are seeing in the short term just ahead of the elections?
Look, I think, as I said, it's not as much anything sort of concerns around the election apart from maybe or about the market apart from maybe valuations, but it's just that the attention span has been elsewhere, and it's not. I mean, which clearly, so China has been the front and center for people right now, and that, as I said, might continue for a little bit more. I think India is seeing outflows, but if you look across the region, we are also seeing Japan, Korea, some other markets kind of seeing that as well. So I think it's just that it's a very large part of the index that has moved more than 20% from its lows, and so that's where people are sort of having fear of missing out in that market, which is why I think we are seeing a little bit of volatility in our markets as well. But that should be tactical in nature. I think once we sort of hopefully beyond elections, you should as the numbers come through, I think people should start to look back at the India story. I think our positive view on the market continues to come from the fact that it's a market where earnings continue to come through. It's a strong earnings delivery in the market. Obviously, we are in the middle of the reporting season. That the season started a little bit softer with tech and banks, but I think it has kind of picked up pace, and right now from the numbers we are tracking, we're kind of 60 to 70% through in terms of the reporting season, and the numbers are coming in close to like 12-13% year-on-year earnings growth, which is what our expectation was. So I think as long as you continue to see evidence that this is a market there where earnings are coming through, you could see markets, FIIs coming back, or investors generally coming back. In the near term, I think DII continues to support, as we know. I mean, just looking at the year-to-date numbers, the DII flow, which is both mutual funds and insurance put together, that's close to 20 billion US dollars net inflows. FII is obviously a billion and a half, close to 2 billion net outflow, right? So the DIIs are more than offsetting the selling in the market at this point, and we think they will continue to be the stabilizing factors here.
Right. Sunil, just one question before we let you go. In the emerging markets, what is that one thing in this basket that you are finding the most attractive right now to invest in? Which EM?
Yeah, look, I think we have a sort of, for lack of a better word, barbell approach within the market. So we have bits which we like from a more tactical value side of things. So we are overweight the China Asia markets. We are overweight some of the North Asian markets, which include Japan and Korea. The story there is more kind of a tech cycle recovery and the AI theme and the value of program. So those are kind of the more sort of value characteristic markets for us. And then on the longer term structural side of things, we are both overweight India as well as Indonesia. I think that's where we are kind of spending most of our time on, and that's where we have the positive overweight allocations within the Asian region.
Thank you so much, for joining in with us this afternoon on ET Now, talking to us about the Indian markets, emerging markets, what's looking exciting, and all about the flows. That is Sunil Kaul joining in with us from Goldman Sachs. But